Good afternoon, ladies and gentlemen, and welcome, or good morning for some of you, even good evening for those of you who are following us online from various parts of the world. It's a great pleasure to be here with you and to welcome you to this stream on special events at the European Development Days here in Studio One. My name is Florence Ranson, and my aim is to try and lead you as smoothly as possible through the next day and a half. We first would like to point out at a few housekeeping issues, which are always very useful. As you have noticed, for those of you who are in the room, this is a silent conference, which means that you have to have your headsets on, otherwise you do not hear what is going on. And then you can choose the language of your choice, since we have French and English. You keep your headsets with you throughout the day, you hand them back tonight, and we'll give you a new set tomorrow. We also have Wi-Fi here in the room. The network is EDD public. There's no password, so feel free to use it. And to all of you who would like to follow us online, but also for those of you who want to promote the event, comment on the event, and make a buzz around the event on social media, we do have a few hashtags. Of course, we have the hashtag of the development days themselves. That's hashtag EDD2022. But you can also use the hashtag Global Gateway and the hashtag EDD Young Leaders, because we do have some 10 young leaders from all over the world who are going to take part in several sessions, not necessarily in this studio, but in other parts of the conference and in other parts of the program. This special events stream is a little particular in the overall program of the EDDs, because we're not going to be looking at one theme in particular. We are going to explore various aspects of the global gateway together. We will, of course, be looking at some specific issues like sustainable finance and health, but we will mostly consider the global gateway from the regional points of views from the various parts of the world, and we will explore the impact of the global gateway, but also all the opportunities that it offers in different parts of the world, ranging from Asia to Latin America and the Caribbean, including Africa and EU neighboring regions on the way, that is between today and tomorrow. So as you see, it's a very broad economic and geographical scope that we will be exploring. And we will discover that scope thanks to our experts and speakers from extremely varied backgrounds, as you will see. Just like in other parallel sessions, we will, of course, discuss themes like circularity, sustainability, global approaches and local solutions, but always with the global gateway as a red thread. We aim, of course, to not only highlight the issues that are at stake and the mountain to climb that we talked about in the opening session, but we also want to learn from one another. These whole 2 days are really meant for all of us to exchange, share, and build together. Togetherness was one of the key words of the opening speeches that we heard this morning. And indeed, it is what we're going to be looking at, or the lens from which we're going to be looking at. We will share experience and we'll build on the challenges, on the existing challenges, so that we can find together new solutions. We hope that you will accompany us in this journey throughout the next 36 hours. And I will now open our first session for this morning, where we will focus on sustainable finance, which is, of course, an absolutely essential tool to support all the initiatives that we're going to be talking about. To guide us through this sustainable finance discussion, I would like to hand over to my fellow moderator, Ayan Adam. Hello, Ayan. Over to you.
Good afternoon, ladies and gentlemen, excellencies, all the people that are present that are absolutely involved in the work of sustainable finance. So first, welcome to the special session on sustainable finance at the heart of the Global Gateway. My name is Ayan Adam. I am the CEO of AFC Capital Partners. Africa Finance Corporation, or AFC, is the leading public-private partnership that is dedicated to sustainable infrastructure and industrial development in Africa. Before we start, I would like to welcome, to have opening remarks, our host, the Director General of the Director General for International Partnership of the European Commission, Mr. Koen Doens. Thank you, sir. Come to the welcome.
Well, good afternoon, Excellencies, all protocol observed. When we were thinking about this year's European Development Days under the theme of Global Gateway, it became clear from the start that we wanted a high-level session on the politics of it. We live, after all, in times where managing the return of geopolitics with a vengeance is really a challenge in itself. And we also wanted a session on the financing, as the global challenges we're all facing require a financial mobilization of a scale unseen, and therefore a coherent combination of private and public, domestic and international investments. We therefore wanted a private asset manager in this panel, and I'm very glad we have Elodie, the Chief Responsible Investment Officer of Amundi. We wanted an investment bank with a firm experience in our partner countries, and so I'm very glad we have Werner Hoyer, the President of the European Investment Bank. We wanted a public authority of our partner countries, and I'm extremely glad that we have the Prime Minister of Namibia, Her Excellency Sarah Kugongelwa Amadli. And we wanted, of course, an entrepreneur from our partner countries, and it's really, really a pleasure to have my friend Tony Elumelu here with us, who, apart from being himself a great African entrepreneur, is also working to unleash the huge entrepreneurial potential of Africa's young people. And we, of course, wanted an outstanding moderator with the credentials actually to be on the panel itself. Ayan, really great to have you. Our starting point is that more and more investors and institutions, when directing their money, are looking at issues beyond traditional financial analysis. They're looking at economic, social, and governance standards. And efforts to incorporate ESG standards into investment decisions and strategies started 30 years ago, but they have accelerated really in the last years. Currently, the assets under management of ESG-related funds amount to $31 billion, and they are set to rise to $53 trillion by 2025. Green bonds are on the rise in recent years, mostly in Europe and in Asia. And ESG-linked debt issuance more than tripled last year to $150 billion US. In Mexico, Peru, and Chile, issuance has reached 12% of GDP. And countries like Togo and Benin also issued ESG-related debt in 2021. ESG investments now make up almost 18% of foreign financing for emerging markets, excluding China, quadruple the average of the recent years. In other words, investors no longer face a choice between profit and doing well for people, planet, and prosperity. The EU has set an agenda to harness this force. The EU Green Deal investment plan aims to raise $1.14 trillion to help pay the cost of making Europe net zero climate change emissions by 2050. And we are taking initiatives to help guide companies to make good investment decisions through things such as the taxonomy and to improve transparency in supply chains with work on sustainable corporate responsibility. Global Gateway, which is the main theme of these days, is our external strategy to deliver sustainable investments across the globe. A value-based proposal from Team Europe to offer respectful and qualitative partnerships and co-investment, which connect Europe and partners across the globe, creates links, not dependencies, and reinforces the EU and our partners' resilience and strategic autonomy. Global Gateway aims to mobilize up to 300 billion in investments between 2021 and 2027 of public and private finance. It supports partner countries in building a conducive, sustainable investment climate, because developing credible and coherent sustainable finance frameworks, taxonomies, standards, labels, sustainability-related disclosure is really essential. Global Gateway will provide transparent and reliable information for investors who seek truly sustainable investment opportunities, and it will provide confidence to issuers and companies that we want to claim that activities are green without fearing reputational risks. Global Gateway also provides public support through, for instance, guarantees and blending instruments to catalyze private capital in frontier markets where the risk is perceived as too high by investors. And here, the EFSD Plus, our specific instrument, will play a crucial role. And finally, it stimulates the uptake of sustainability-related financial instruments, in particular green bonds, which can really play a key role in mobilizing private capital for sustainable investments. To end, I want to maybe highlight a few initiatives the EU is working on concretely. First of all, the European Commission will develop a comprehensive strategy to accelerate the flows of private capital towards sustainable investments in low and middle-income countries. A high-level expert group, which we are setting up, will be mandated to provide recommendations to the Commission about transformative actions that the EU can take to scale up sustainable finance. Secondly, we will have a package of technical assistance and capacity building to support countries in developing credible frameworks and taxonomies, but also in developing pipelines of green, bankable projects and fostering links between local projects, entrepreneurs, and global investors. And finally, we are coming with a specific initiative to support partner countries in developing and scaling up their green bond markets, a global green bond initiative that we are developing. The GGBI will aim at addressing challenges to green bond issuance in a holistic way, tackling both sides of the investment chain. The investor side, with the demand for green bonds issued by low and middle-income countries, and we will work on the issuer's side, so on the supply of strong pipeline of green bonds. And so I have a message to the panel, and I'll end there. It would be really very important and very interesting to get the panelists' insights on these issues, and more specifically on how to build a conducive environment that can attract additional private finance to low and middle-income countries. What policy incentives and partnerships are needed for an optimal crowding in of private sector financing in low and middle-income countries? And finally, what is the role for sustainable related financial instruments and products, including green bonds and other innovative financial mechanisms? Really looking forward to listening to your inputs in the panel. Thank you very much.
Thank you very much, Mr. Dunes, for amazing and remarkable opening remarks. You've laid out what the the European Commission is doing. Also, we have heard your challenge on how do we scale up finance for sustainable investments in low and middle income country and the role of green bonds. It gives me a great pleasure to welcome a highly distinguished panel. I have the honor of first welcoming Her Excellency Dr. Sarah Gugungelwa Amadila, the Prime Minister of Namibia. Welcome to the podium, Her Excellency. It gives me a strong pleasure and an honor to welcome Dr. Werner Hoyer, the President of the European Investment Bank. Welcome to the podium. I'm honored to welcome Mr. Tony Elumelu, investor, founder, father of many financial institutions, including the AFC, and a philanthropist in his capacity as the founder of the Tony Elumelu Foundation. Last but not least, one of the few women in asset management, Ms. Elodie Lugel, Chief Responsible Investment Officer at the great asset manager Amundi. Welcome to the stage, Ms. Lugel. We will start our panel. I will start with the first question directed at Your Excellency, Prime Minister of Namibia. Your Excellency, you've been a minister since 2015, and before that, a highly accomplished Minister of Finance. You have unveiled an ambitious plan to put Namibia as the #1 player in the green hydrogen. Can you tell us what role sustainable finance will play in this ambition? And in particular, if you can comment on the role of green bonds. Your Excellency, you have the floor for 10 minutes. Thank you.
Thank you very much, and greetings to all the panelists and the delegates. Indeed, Namibia wants to place itself as a leading country in the world for optimizing the benefits from green hydrogen to promote green growth in the country. I must say actually that we are one of the hardest hit countries by climate change, and because of our categorization as an upper middle income country, the support that we have received from the international community to address these challenges, although we are amongst the least contributors to climate change, has been rather minimal. So for us, we think that the green hydrogen presents us an opportunity to both optimize economic growth, but also to mitigate against the impact of climate change, which are real for a country like Namibia. And in this regard, we are working with a number of European countries, including Germany, Netherlands, and Belgium, to develop the green hydrogen project and to put up the necessary infrastructures to transport the energy therefrom to exports to parts of the world, so that we support environmentally sustainable growth across the globe, and also address the deficits for energy supplies in many parts of the world. And we are engaged with the European Union in discussions to also cooperate, specifically to put up a green bond that would enable us to raise funds from various sources to finance not only the green hydrogen project, but the related industries, but also climate change related interventions in the country. As I indicated, we are one of the hardest hit countries by climate change. So we have planned to put up a fund into which the resources that we'll be able to mobilize through these bonds is going to be warehoused and allocated to a range of of projects that are green projects, including infrastructures where we are hoping to have a train that is fueled with energy from green hydrogen. And that is most important for us as Namibia, not only from an environmental point of view, but also given the fact that we are a population of only 2 million people living in a very vast country. So it is very expensive to connect people, and this electrical train is going to make business more efficient and movement of people more efficient. We have already provided land near our coast for green hydrogen-related industries that we are hoping to attract to the country in this regard. So we are very, very excited, and we are hoping that when this financing comes, and I was happy to hear the statement that was made earlier before the start of this panel discussion, that they are looking to not only finance European companies that are coming to invest in our countries, but actually to help catalyze private sector investment in our countries. And that they would hopefully also directly finance some of these corporates, both in the private sector and in the public sector, in the form of parastatal.
Thank you, Her Excellency. We have a little bit of time, so I'm going to go back to you and say, how do you plan to engage in sustainable? How do you use the sustainable finance architecture to basically support you? You have around 5 minutes. Thank you.
Yes. How we are going to use that? We have ambitious programs to reduce our carbon footprints in the country, and as I have indicated, we have committed ourselves to promote a green growth so that we incorporate environmental protection considerations in all the activities that we are going to implement. But we have also decided that growth is not important for its own sake. It should translate into improved human conditions, and we are therefore investing significantly in education, in health, in housing, to make sure that we improve the welfare conditions and we create the capacity that we need to industrialize and also to drive the growth of our own economies, and not just rely, as was indicated, not to create dependencies, but to grow together and prosper together.
Thank you, Her Excellency. That was very well covered, and thank you very much again. Let me now turn to Dr. Hoyer. In the past 10 years, EIB, the European Investment Bank, has financed euro 70 billion of sustainable investments outside of the European Union. These were to address the sustainable development goals and the infrastructure financing gaps. More resources are needed, specifically from the private sector. What, in your view, are the opportunities as well as the challenges you see for development finance institutions, in particular your institution, the European Investment Bank, to more rapidly scale up or trigger the mobilization of sustainable finance towards infrastructure investments in low and middle income countries? And I'm going to draw a particular attention to Africa, where huge 2/3 of the least developed countries are, and humongous infrastructure gap. Thank you, sir.
Well, thank you very much for this opportunity. I mean, it is obvious where the challenges lie, but it's much more fascinating to talk about the opportunities that might stem from it. The challenges, I mean, the infrastructure gaps are extremely big, and the financial resources are limited, so one needs to develop some creativity. Now, boosting activities in least or less developed countries, or sometimes in emerging markets, this requires definitely the combination of three things which always go together at the EU Bank. That is lending, blending, and advising. It is not enough to offer a loan. It must be accompanied by the necessary blending facilities that the European Commission offers for us. So we are in very close cooperation with the European Commission in order to organize the combination of grants and loans. But then it's also necessary to develop sound, bankable projects. You must know that EIB is financed only by 5% of direct capital injection of our shareholders. the vast majority of our financing comes from the capital markets. We invest every year in the fund and the bank together roughly 90 billion euros. And for that, we need to do the funding on the capital markets and sell bonds at the volumes between 60 and 90 billion euros per year. So that is not easy, because you need to convince the investors that with all due development energy that we put into this whole thing, we are still a bank. Some people have problems to understand that a bank lends money and it expects the money to come back. This can only work credibly vis-à-vis investors, that when you can say, okay, the projects we are financing are sound, they're economically viable and sustainable. And this is part, by the way, that is embedded in our statutes. So economic viability and sustainability are, from the beginning of the institution, the basis. So now we obviously need, to find new funding sources, which we have credibly and successfully begun in 2007. And secondly, we must help to develop good projects. On both fronts, we are available. And if I just look at the development of the green bond market, which is the biggest part of the sustainable awareness bonds markets, that you can say in 2007, when some creative financial engineers in our institution created green bonds, that was considered a pretty lunatic idea. This lunatic idea is now more than $1 trillion worth, and we are still the strongest emitter of green bonds. This is a road to success, and we are going to further develop it. If I look at the trajectory from 2007, or let's say 8 to 2021, it's a steep increase, and I have no doubt that 2022 it will increase. How come? Well, if the investors can rely upon the soundness of the projects, then they will seriously consider what we are doing, and then we can tap these resources. I remember a Davos meeting 5 or 4 years ago, when I was sitting together with a number of heads of government or state from Africa and from the European Union around the table on climate issues. And all of a sudden I detected a friend, a leader of a big Swiss commercial bank. And I say, what the heck are you doing here? He told me, well, this is what my asset holders, my investors, expect. They want to have offers now which go along with ESG principles. So there is a huge opportunity. I wouldn't say the money is waiting on the streets to be picked up, but there is a huge funding opportunity on that market if you remain stable and reliable. And this is a path that I personally very often also recommend to our partners in the world, and particularly in Africa, because funding markets are not limited to huge economies like in the north. Also in Africa, you find areas where funding of this kind is possible and should be encouraged. And we are happy to contribute to these kind of funding projects on the methodological side as well. So I think there is a lot to be explored in the next years together with our friends in Africa and Latin America.
Thank you very much, Dr. Hoyer. I'm going to come back to you on one quick question. Development of pipeline, you talked about, very important, bankable projects, technical assistance, but there is a significant amount of seed equity that's also required. How do you, as a key bank in this area, you talked about the loans, the capital markets, but there is also a need to create these projects with patient capital. Any comment on that?
Absolutely. This is an area this is exploding right now. And by the way, this is not something limited to development. That happens within the European Union as well, for instance. And that means that sometimes the markets are dried out. They need this kind of seed capital. Also because a bank like the EU bank, which at the end of the day has also at least a partial cover by the EU budget or the national budgets, can go more into risks than possible. I take an issue from the life science sector. When we invested 2 years ago heavily in the fast development of the BioNTech vaccine, or now sold as Pfizer vaccine, then it was something that the private sector could have done, like they have tried to do it with many other projects which failed. So you must have the courage also to run the risk of failing. And in this case, it was possible. And now, of course, everybody would be happy to have developed and financed that thing himself or herself. But it would not have been possible, and many of you would not have in BioNTech or Pfizer shot in your arm had we not done this. So this same thing applies to activities outside the European Union as well. And as a matter of fact, many African countries have already approached me on this.
Thank you, Dr. Hoyer. Let me turn to Mr. Tony Elumelu. Your foundation work is based on the economic philosophy of Afrocapitalism, which states that African private sector has the power to transform the continent through long-term investments, creating both economic and social wealth. In this respect, in what ways can sustainable finance help in small businesses thrive and be a driver for job creation and economic growth? How can philanthropists like yourselves be fully mobilized to play a key role in scaling up sustainable finance? Mr. Elumelu, you have the floor for 10 minutes.
Thank you. So first is small and medium-scale enterprises are a strong engine of growth for economies. You can't think of revitalizing, transforming, growing an economy without focusing on the small and medium-scale enterprises, especially in Africa. Small and medium-scale enterprises create jobs. They have people engaged. They create demand. And any financing or any support to that segment is a critical one that is required for economic development. So sustainable finance to that segment is a very potent way of helping to transform economies. I speak from experience. We, as a bank, I chair a bank, United Bank for Africa, that focuses a lot on small and medium-scale enterprises. And I have seen how catalytic financing in this sector can be in helping to develop economies and helping to create middle class and helping to even drive job creation. As a philanthropist, I've also seen the impact of supporting small and medium-scale enterprises, how it helps young men, young women, and parents also who have small shops, how it helps them to create more prosperity for everyone. And that speaks to the philosophy of Afrocapitalism, a realization that the private sector has a role to play. And that should start, in our estimation, from the small and medium-scale enterprises. We have seen through partnerships, like why I'm here today, the European Commission, partnering with the Tony Elumelu Foundation to support young African women. Last year, the Economic Commission supported young African women with over 20 million euros. And that is direct investment to economic development without going through middlemen. And that helps to uplift the small and medium-scale enterprises and grow our economies. We have seen that kind of intervention by Friends of Africa, by African philanthropists, by African businesses is what we need in the 21st century to help develop and improve Africa. So sustainable financing to small and medium-scale enterprises, especially on the African continent, is the way to go. Is the way to go, and all of us supporting and prioritizing the small-scale enterprises is very desirable for true and sustainable economic development. The experience we have with the European Commission is one I preach everywhere, that on the African continent we have a lot of issues. There's a youth migration issue, there's insecurity issue, there's hopelessness, joblessness, etc. But what we need to bring hope to people and to stop all of these vices happening is by prioritizing them, supporting them with sustainable financing, funding. Equally important, by training them, exposing them to how to manage capital if they get capital in driving their business. I look forward to a future where today's small and medium-scale enterprises can prosper so that all of us collectively can help to develop the continent.
Thank you so much, Tony. I'm just going to ask you one more question. Your foundation has set the standard in the context of Africa for empowering women and the youth. Is there a role for the foundation to also play a role in the further infrastructure development of the continent?
I wear two hats. First, I have businesses, and also I wear the hat of philanthropies. On the business side, we have seen that critical to Africa development is infrastructure provision. We have so much deficit in that area. If you look at access to electricity, which is very critical for the takeover in the economy, is so poor in Africa. If you look at transportation, we can do a lot more in the area of transportation. And so, wearing the hat of philanthropy also, I have seen that even the people we support, small and medium-scale enterprises, they need some of this basic infrastructure to do well. They need access to electricity. They need mass transportation system, storage, etc. So what I preach now is intersection of philanthropy and business. There's so much global private capital seeking for investment destination. I like to listen to the Green Bond. I heard about Green Bond. I know the efforts development finance institutions are making to help create improved infrastructure. But what I want to add is, especially this era of energy transitioning, we need energy security in Africa. We need to help improve infrastructure on the continent so that Africa is not left behind. Africa needs, for me, the greatest support we need is to make sure that we channel funding to the areas that will help us improve energy security. It's a major problem for us on the continent, and yes, I do see a critical role for philanthropies, a critical role for businesses, a critical role for development finance institutions, and in fact the world in helping to improve infrastructure. I have often called for a Marshall Plan that helps to improve infrastructure deficiency we have on the continent. If we do so, then the road to sustainable development on the continent would have begun. If we don't do so, it will take a long way to go. And no better way to mobilize everyone on the continent along this energy transition than to support energy security for the continent.
Thank you very much, Mr. Elemelu. Let me turn to my left. Ms. Logel, last year, your institution, Amundi, joined the Net Zero Asset Manager to pledge and to reach a target of net zero by 2050. Yet mobilizing the trillions that are in the private sector, because that's where the money is still remains a significant challenge in financing climate policy and sustainable development, particularly in low middle income countries. And as Her Excellency has noted, countries like Namibia have really suffered, like most of Africa, from the impacts of climate change, and climate financing has not reached us. From the perspective of a global asset manager, what do you think are the reasons behind this lack of commitment to this area? And how can the public sector work with institutional capital like yourself, an asset manager, to mobilize better capital to emerging economies? Thank you, Ms. Logel.
Thank you, and thank you all for having me today and give me this opportunity to share with you the position of the investment community as of today. I will start by saying that within the investment community, I think it's important to stress that it's not, the objective of mobilizing private capital at scale is really something that is shared across the investment community. So it's not very much a question of awareness, but really of channeling framework capabilities. The global recognition is that on the financial needs, actually, the bulk of the CO2 emission increase is set to come from developing countries as they grow, industrialized and urbanized. The EIA report that to achieve this global carbon neutrality, it requires a sevenfold increase in annual investment in green and clean energy on an annual basis by 2030. So it's huge. And even if actually in average in a developing country, the avoidance of CO2 emission is in average as much as a half as what it costs in developed country, because countries could jump directly into a clean energy technology without phasing out from a high emitting project underway. Still, the investment in the energy sector is not deploying, is not yet there, and in addition you had a high cost in terms of equity and debt cost, which is 7 times what it is in developed country, and the impact also on balance sheet with the pandemic that we've all experienced. So this is, I would say, the global observation that we have on the needs. On the other side, indeed, I mean, the financial industry has taken some big commitment recently, and in particular at the COP26 with this net zero commitment. As of today, there are trillions of dollar assets that are pledged to achieve this net zero objective by 2050 from the financial industry. And in addition, we can also observe that in the European market, as far as savings market is concerned, we are also observing a real paradigm shift. I mean, it's a sustainable market. In Europe, it's 20% annual growth since 2017. And even last year, I would say, looking at the saving inflows going into this European market, 75% were directed to sustainable investment solution. So the capital is there, the commitment is there, and there is this common recognition of the needs. So I would say the crux of the challenge is really to fulfill the expectation gap, to make sure there is a match. Asset owners that have this capability to deploy capital, even if they have this commitment, actually have no precise and defined mandates to invest in low and middle income countries. Therefore, they need a rationale. And actually, to mobilize capital at scale, we need to mobilize mainstream investors, and not looking for only the pure impactful investors. So how to mobilize mainstream investors that are currently facing some challenge around the scarcity of suitable investment opportunities, considering their investment framework. And I would say that in particular, I would mention 3 main challenges for them actually to go further. The first one is the access to data. The second one is to access to financial instruments. And the third one is to access to suitable risk-return profile according to their own risk-bearing capacity. And if I come back on those quickly on those 3 points, I will start with the access to the data. You will hear oftenly and frequently from asset owners and asset managers that climate data access is a barrier to capital transition. You could consider it's an easy say. It's a very, very crucial point. I mean, beyond each and every net zero commitment of those asset owners, of those investors, comes, I would say, next post reporting, transparency requirements from those investors that have actually to show their carbon reduction emission from their investment portfolio. So everything starts, I would say, with carbon data access, so that they can report on how their capital is allocated and deployed. And having access to that data, having access also to the transition plan of the company, enable them to assess, invest, engage with the company, as well as report. So the harmonization of climate data disclosure is really should be considered really as an enabler to embark all those mainstream investors on that respect. There is also something that is important to have in mind as far as climate data is concerned, is that on the other side of the regulation, so in particular in Europe, it's also important actually that the notion of and the principle of investing in a company which is in transition is well recognized as well as a sustainable investment. As of today, we are, as a sustainable investment, equipped by a set of regulatory framework that are asking us actually to report on how the company state is today in terms of alignment with the green taxonomy, and all the work that is currently done actually also to recognize this principle of investing in a company that is in transition to be recognized as sustainable investment will also be very important to support the shift of capital toward those companies really to finance the transition. So this is really a particular and very critical dimension actually to foster the shift of capital. The second dimension is the access to financial instruments. The market, I mean, if we are looking at the green bond, social bond, sustainability bond, the market is still too narrow, even if indeed we got very, I would say, we are having a very strong momentum on that front. I mean, the 2021 year has been very important in terms of issuance. On developing market, it's 95 billion of issuance on the green bond side. It's $64 billion issuance on the social and sustainability. So all in, you sum up everything, it's 3 times the volume of 2020. So it's really going in the right direction, with more country diversifying exposure to country, also as non-financial institution issuing debt. That is very important for investors to allow building a diversified portfolio. Still, it has to expand. GSS market in developing countries is only 5% of the global GSS market. So it's still too narrow today. It's really booming, so it's great, but it has to expand further to attract this capital and channel in where it's needed. Finally, I mentioned the risk-return profile of such opportunities. Not all investors have the bearing capacity actually the risk-bearing capacity to enter into all opportunities. And this is where actually the blended finance is particularly proving, I would say, its benefit and really able to unlock also capital allocation by putting in place partnership with a developed financial institution really able to provide and to bring their credit enhancements capabilities. They bring as well credibility on the development program that are important for those mainstreaming investors, as well as technical advice and technical advisors bringing capacity really to facilitate GSS issuance. We have the asset owners that are having the capability to deploy capital at scale, and asset manager finally actually that brings expertises in terms of structuring and investing. So those type of public and private partnerships are really key, I would say, to further expand this capability and have, I would say, also deliver the proof of concept. I mean, we have put in place different partnerships that really unable to deliver that. So all in, I would say, without substituting to policymakers, I think investors are aware of their ability to act and enable. And we are some challenges that I've mentioned to tackle in order to have more to come.
Thank you very much, Ms. Logel. So you really highlighted a number of issues in that presentation: data, harmonizing, de-risking, blended finance, as well as the importance of the growth of emissions from developing countries. So I'm going to take a moderator privilege and say all developing countries are not the same, and say that there is a humongous movement today around the net zero. But how do you tell a small African country that has no emission, which is net positive because it's forests, you should not develop your cheap resources in gas? It's a big question, and the financing is also of adaptation. The whole climate finance has been triggered towards net zero. But most of Africa, with the exception of Southern Africa and few North African countries, are already close to zero. And if you add the forest, we're positive. So how do we also mobilize sustainable finance for resilience and adaptation? And how do we treat Africa differently from highly industrializing countries in Asia in the response on sustainable finance for climate? I'm going to ask the entire panel to comment on that. I will start with you, Her Excellency.
I think that one way really to do it is to assist these countries with financing, as we are talking about it now, recognizing that it is to our mutual benefit as a global community that these countries that are currently not polluting continue not polluting. And they can only continue to not pollute if they are not in a desperate situation where they are forced to utilize whatever resources are available to them, that they can harvest in a manner that is cost efficient for them, using the little resources that are available to them. And we have to take note of the fact that many of these countries are highly indebted, or they are poor and cannot afford to raise capital, or those that are actually classified as middle-income countries like ours are also faced with immense challenges, social challenges such as poverty and unemployment that they cannot afford, although they are categorized as middle-income countries. So the funding that comes to these countries should actually focus on improving the livelihoods of people rather than focusing on artificial criteria like per capita income. That is one. Two, we should optimize private sector investment. Instead of lending money to government, we actually support investment through cooperation between European companies or advanced countries companies and companies from those countries, because development can only be sustainable if it's also locally driven and it's impacting on the life of local communities. But I would like to say that for countries like Namibia, we are peculiar in another way. We are not only a country with poor people, but highly endowed with resources and therefore categorized as an upper middle income country. We also have large savings. Although the people are poor, we have saved a lot of money through institutions, pension funds, medical aid funds. We are actually exporting capital. But the capital markets are not developed enough to utilize these savings to deploy them into growth-enhancing investments. So part of what can be done in catalyzing private investment is actually to support the development of the local financial markets so that we can raise funding without these countries having to worry even about forex exchange, for example, in a case like Namibia.
Thank you very much, Your Excellencies. Let me turn to Dr. Hoyer. Dr. Hoyer, you've heard some of the discussions. It will be great to get the perspective of EU's bank, European Investment Bank.
Well, let me first of all say that I subscribe to every line of the statement by the Prime Minister just a minute ago. Really do so. Secondly, I believe that we would end up on a slippery slope if we would say, well, if we have not contributed to the earth pollution at all, we can do it a little now and engage now in fossil fuel production. That is not convincing. We must force the North to go down with its use of fossil fuels and do the main burden of the approach to net zero. However, this requires also that we need to see the opportunities we have in the developing countries, in particular in Africa. Look, for instance, at green hydrogen dreams, which I fully support. But I must say that requires an electrolysis capacity that must be to a large extent established in Africa. So we from the north must bring top technologies to Africa and give our African friends the opportunity to do the electrolysis and then produce the necessary green hydrogen for themselves, but also for the rest of the world. So this is one big thing. On the other question of the mobilizing of private capital, which is key for me, we need to see one dimension to it. The most valuable currency we have on the capital markets is trust. And that means when I could go to the capital markets and raise 80 billion euros per year or more, then I need the trust of the investors because they believe the projects we finance are not lunatic, but will come back to them, have a return. But secondly, they want to be absolutely clear that what we label green contains green. And this is why, after the first issuance of green bonds in 2007, we developed the green bond principles and then developed it further in the European Union, and now this leads to the EU taxonomy. You can argue about this or that bureaucratic detail in that, but the basic idea of a confidence-building measure to give reassurance to the investors is key if you want to tap the capital markets.
Thank you very much, Dr. Hoyer. You make a very good point. Let me turn over to Mr. Elomelu. You've heard the panel, and so what is your take in the context of Africa? Where is the climate finance? And despite the pledges, we have not received sufficient to unlock even our own private sector.
I think that a conversation about climate finance, about sustainable finance, should be balanced globally. Just yesterday, Germany opened their coal plant. Just yesterday. Germany opened their coal plant because of what I call energy security. And for Africa, we have a lot of infrastructure deficit, yet we have abundance of gas and other means of energy security. And if the world is saying you do things differently in Africa, then we should have, again, a Marshall Fund that helps Africa to leapfrog, to come up. If we don't do that, it will be unfair and inequitable to expect Africa to grow piecemeal at a time like this. Germany, yesterday, opened their coal plants because of gas challenges they're going to have from Russia. So the point there is we should all come to the table in a fair manner so that we support those who truly contribute less. Total gas emission on the continent, less than 2%. Some have 17%, So when we are evolving, the world is evolving policies. On Africa, we should look at it from point of view of equity, balance, and need for Africa to grow.
Thank you, Mr. Elomelu. Again, Ms. Logel, you have the last word again. So thank you so much. You are an asset manager that we all aspire to be. Amundi was a key player in actually looking at the green bond market and done a number of sustainable offering at the asset manager level. So how do you incorporate this concept of just transition in your outlook, and how can new managers like myself look up to you to learn? Also, do you have any perspective, because every region now is developing its own taxonomy. How do we harmonize so that what Dr. Hoyer said, there is a trust when you issue a paper that investors, which today are mostly in a global market, can say this is the right thing? What advice do you have? Thank you.
It's a broad question, actually, for a final word. I will just insist, therefore, on the needs. Harmonization of the climate disclosure framework is absolutely critical. You mentioned it. Having a plenty and diverse glossaries will definitely not foster. So this harmonization is essential. This is the first element of it, because I would say it creates also indeed a common language, and therefore it creates the trust actually in the market. The second dimension I wanted to answer actually is a just transition dimension. We haven't talked about it during this panel. It doesn't mean that it doesn't exist. This is something that is completely, I would say, feasible to integrate. This is what we are integrating when we look at climate transition. I won't elaborate on that; it will be too long. But my point is to say that this socially acceptable transition is something that is definitely important in order to be sustainable over time. And as of today, there is definitely, for investors like us, metrics, data, as well as framework, not yet, I would say, official ones, but at least you can definitely start by putting your own framework to make sure those considerations are taken into account.
Thank you so much. So let me end by thanking this highly distinguished panel, and just a few remarks. We have heard the role sustainable finance plays. We are in an interconnected world, so emissions have no borders. Also, we are seeing the impacts of climate, and you've heard the important role of a leader trying to establish its country towards greener path, and the use of green hydrogen. Significant investments are required. However, that is the way to go. We've also seen that how do you create a just transition from countries that have low emission profile, yet 80% of the population have no electricity. So these are challenging points that people are going into COP27 in Africa, in Sharm el-Sheikh, Egypt. We also hear from an investor who says there is a need to harmonize the taxonomy across the world so that we can have a uniform way to create the trust that Dr. Hoyer talked about that is needed for issuers, for us to unlock that private capital. I think this was a very rich panel. I am highly grateful to this distinguished panelist. Thank you very much, Your Excellency, Dr. Hoyer, Mr. Elemelu, and Ms. Logel. Thank you so much, and thank you.
Thank you very much.
Thank you very much, Ayaan, and thank you to all your speakers. Indeed, a very interesting way of kicking off the debate with the fact that if we do not have the proper funding and the appropriate funding, it's going to make everything else very, very difficult. I also enjoyed the fact that you highlighted the importance of local take of the solutions, the local aspects of sustainability, all as part of a just transition. So, ladies and gentlemen, we're now going to break for lunch. We will be back here in Studio One with more special events this afternoon starting at 2:55. During lunch, I would also invite you to visit, and that is also for those of you following us online, our global village. So you can visit it physically if you're here in the room, but online you can also visit the some 78 stands that are out there presenting a lot of very, very interesting projects. So enjoy your lunch, enjoy the networking, and see you back this afternoon.